It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, it's the Real Estate Breakfast. Yes, breaking down for you the Australian property market with one conversation at a time. Each week, we talk to some of the biggest voices in real estate as we unpack the trends, the numbers, and what you're feeling right now in this current marketplace. And the Saturday Property Show is back again tomorrow. We're going to be in Canberra talking and looking at the local property market. First home buyers, downsizers and families are competing there for quality homes. And we also look at the location of Canberra itself in this current market phase and how much value is linked to the location. That is all coming up tomorrow. It is a Friday today, July the 17th. Happy birthday, David Hasselhoff. Yes, turning 74. He's actually unexpectedly huge in Germany. Germans embraced him as a pop singer, and he had multiple chart-topping albums there. And he also performed on the Berlin Wall. You may have seen him on New Year's Eve, 1989. He famously sang "Looking for Freedom" while standing on a crane, wearing a jacket covered in flashing lights. It became one of pop culture's most memorable images. The Hoff turning 74. Let's go to Perth right now. He is not the Hoff, but his name is Matthew Hughes, and he is from Capital Property Advisory. And Matthew, you know a little bit about the Hoff there, pop culture icon.
Yeah, I'm unfortunately old enough to have seen that video and footage. It's an odd following that he's got over there, and very localized, it seems, as a pop star. But watched him growing up on Baywatch and other things, and very interesting footage if you want to look it up.
You make me feel old when you say grew up watching him on Baywatch. But anyway, let's have a look at the Perth property market, which is beginning to feel a little different right now. It's one of Australia's strongest performers, but buyers now have more choice and properties are taking longer to sell than they were a few months ago. Prices remain well above last year's levels, yet the frantic pace, it is easing. And Matthew, the conversation is shifting from can I buy anything to am I buying the right property? Are we finally seeing that Perth is returning to, well, I don't like to use the word a balanced market, but that's what it's looking like?
And we predicted this early this year, late last year, that we would see a bit of an uptick in stock this year, a little bit of a reduction in transaction activity. That's been exacerbated by the budget changes. So we've actually seen a near 70% reduction in growth velocity just recently, and that was to be expected. But it's still tracking at probably 7 to 9% per annum based on what we've seen halfway through July. So it's still a very robust market, but more of a two-speed market where superior location, superior assets are still attracting multiple offers, but it's not 10 offers anymore. It might be 2 or 3. And buyers are just being a little bit more selective, and they're approaching their negotiations from a position of a bit more strength than what they've had in previous years.
And detached homes, now they continue attracting strong demand right across Perth at the moment, especially with quality established properties. Buyers, now they've got a lot more time before making offers instead of these rushed decisions. It is a nice position to be in. Is this then, Matthew, more of an even property market and what we'll expect in the next 12 months?
Yeah, I think you're right. Look, our investment philosophies have always pointed us towards, even though we're buying for investors, we buy things that are attractive to owner-occupiers in areas that are driven by owner-occupiers. And that's the sort of stock that's still performing well and selling quite quickly. But even with that sort of stock, we're hearing agents talking about running, instead of 7-day campaigns, they're now running 14 or 21-day campaigns. And that's part of the reason for the increase in days on market as well. But the demand for that owner-occupier product especially if it's ready to to live in and doesn't require any work is still very high, but there's that little bit more selection around. And so buyers are gravitating towards that sort of property. And that's why you've got more buyers through those home opens and more offers being written. And you've got the inferior stuff just sort of sitting on the market for longer until the seller adjusts their expectations to the new reality, which is we're now in a slightly more normalised market.
Yeah, definitely. And eastern state investors now, they did help drive Perth's property boom, but some are now taking profits as supply gradually increases. Local buyers, they're finding that they've got a little more negotiation power that we're talking about this morning than they did, let's say, 6 months ago. This should create new opportunities for first home buyers in Perth right now, right?
Yeah, look, it's definitely a better environment for first-home buyers at the moment. For first-home buyers in any market around the country, if you're coming in, especially using the 5% deposit scheme near the peak of a market like a Brisbane or a Perth or an Adelaide, there is still some growth left in these markets, but when they do soften eventually, which happens with all markets, you may actually find yourself in a negative equity position. And so that's something to consider for first-home buyers using small deposits. But they do have that negotiating power increase that you spoke about. As I said, not across the board, but on certain types of property for sure, especially if you're willing to buy something that's a bit depreciated and do a little bit of work on it yourself. So still focusing on the right location and a good floor plan, but something that perhaps needs a little bit of cosmetic uplift that you can easily do and cheaply do. That sort of approach for first home buyers at the moment is a good one. And I think it's a really good buying window for everybody around the country and in Perth for home buyers at the moment, just while people wrap their heads around these budget changes, wait and see what happens with rates and wait to see what happens with the global conflicts we're seeing as well.
And even though Perth's momentum has slowed, many don't see the conditions for a sharp correction. And one of the reasons is the ever talked about migration driver for the local economy there in Perth. But Perth's probably deserving really to catch its breath after one of Australia's strongest growth cycle runs in living memory.
Yeah, look, it has been obviously a very strong boom cycle. A correction is due at some point. There's just probably too many variables to figure out when that will be. I think that for the balance of this year, we'll have some sort of low to moderate growth. And then when the conversation turns to interest rate holds or interest rate decreases, and you've got a lot of owner-occupiers sitting on a lot of equity here, you might see them start to reactivate at the middle and upper end of the market with the confidence that they're not going to see any interest rate increases for the foreseeable future. So it's a little bit hard to predict at the moment until we remove some of those variables. You've got population growth still running very well, but tapering as well, like the rate of growth. But the economy here, the employment rate is one of the lowest in the country still, and we're still not building enough houses to meet demand, even though that has increased. We're still going to have that structural supply issue. So I've said for a long time now that when it does eventually peak and soften, I think it'll be a pretty soft landing, but you will have those areas that we avoided that were driven primarily by transient investor demand soften first and harder in my view.
We are talking to Matthew Hughes in Perth. When we come back, we've got more on Perth and the way that market is changing. That is up next.
Every morning from 6 a.m. across Australia, we deliver you the latest property news, commentary and predictions from Perth to Cairns and from Melbourne to Brisbane, 7 days a week. Eager to expand your property expertise? Enhance your real estate know-how with us.
Yes, it is time for Real Estate in History, having a look at the Perth real estate market back in the 1970s. It was regarded as Australia's quiet western city. The mining boom, it was beginning to transform confidence. Suburbs were spreading north and south, and families could still buy generous blocks close to the city. Homes in suburbs like Scarborough, Como and Willetton were often selling for under $40,000, while beachfront locations that now command millions of dollars were also considered at the time affordable. Sadly, though, no, that is not the case in 2026. And if you've got some real estate news that you would like to pass on, or if you'd like to voice your thoughts, we've got that voice recorder in the show notes, and the email is myrealestatepodcast@gmail.com. We would love to hear from you. It is a Real Estate Friday. David Hasselhoff turning 74 today. Matthew grew up on Baywatch, and some of Perth's suburbs, Matthew, are seeing homes stay on the market a little longer at the moment, especially if vendors have unrealistic past property price value expectations. I was only talking a couple of days ago just how important getting the price right is. Pricing on properties in this market, you have got to be spot on, which will be the biggest advantage to sellers right now.
Yeah, we talk to selling agents on a weekly basis in different areas just to get updates from them from a boots on the ground perspective, especially if we haven't been shopping in that area that week. They're all saying the same thing, is that any properties that are sitting around for too long, it's typically because the seller's not yet had their expectation adjusted by the time on the market. They're used to seeing properties that are valued at, say, 1.5 million selling for 3 to 6% above that over the last few years. And they're hanging on to that as something that's still achievable in the current market. And unfortunately, it's not. So if you are taking a property to market, which I am myself very soon, it needs to be priced according to the market. And you need to spend some money on marketing and run a good, solid campaign. Engage a good agent who can extract maximum value from that campaign, because it's not just order taking anymore. You actually, all the selling agents having to do some work again, and that's good for the market and good for buyers.
Now, you're one of these buyers that's buying into Melbourne. There's been some pushback that you're getting from investors who are still hesitant about the Melbourne property market. I'd be really interested to hear some of those comments that you're getting, that pushback from investors, and why they're feeling a little bit hesitant about Melbourne right now.
Look, it's always difficult for people to be one of the first to act in a market. Unfortunately, that's generally how you get the best result. I think last time we spoke, I compared Melbourne now to Perth back in 2019, where there's more stock around, there's less buyers, and that's also been exacerbated by the budget changes, where people have, and rightly so, have been sitting on their hands for a while to figure out exactly what this means for investors and whether established property or new property is the right thing for them moving forward, and what tax advice they need in terms of structures. So there's a lot of reasons why people are hesitant, but putting that aside, there is general hesitation always for people who want to wait for the masses to pile in before they get the confidence to do it themselves. And that's certainly not the right approach. I think the old Warren Buffett quote of being fearful when others are greedy and greedy when others are fearful is definitely appropriate here. And that's what we're pushing our clients to do, because that's where we've seen a lot of success for our clients in the past. But it's not always an easy conversation or an easy decision for the buyer to make, because they've got that inbuilt sort of fear and risk mechanism that's operating most of their decision.
All right, we'll wrap it up there. Matthew, enjoy your Friday, enjoy the upcoming weekend. Yeah, it's all happening in Perth, Melbourne. Yeah, the dynamics, the way that they are playing out over the last I would say since the start of this year, ever changing, and it looks like we're going to be in somewhat of a adjusting market, but we will catch you back, same channel another day.
Look forward to it, Craig. Good to talk to you as always.
Every morning from 6 a.m, we bring you the latest real estate news with diverse perspectives from leading industry experts. We deliver the most property podcasts across Australia every week.
I'm sure, Jennifer, you've got a point of view on that. 31, the age that most people think it's the right age to move out of mum and dad's place.
I think that's one of the reality points of the housing crisis that we're experiencing at the moment, that young people can't afford to buy something and even to move out and rent. If you're paying $500, $600 a week in rent, that makes it very, very difficult for you to save.
We've got many renters being pushed further away from jobs, schools and family. Just the petrol, the gas money to get into work is quite significant these days.
Yeah, Yeah, look, I think that's a really important point. We often forget the people who this relates to, and it is people who have jobs nearby who then do add an extra 20 minutes, half an hour to their commute to get into their job.
We connect you to the best real estate information across Australia. The Real Estate Podcast.